Hello and welcome back to Core Finance. I'm Matt Brown, joined here today by Craig Erlam, Senior Market Analyst at Oanda, and we're looking at euro dollar. Euro's had a bit of a push to the upside over recent sessions. Is this dollar weakness or euro strength?
I think it's probably a little bit of both, but as we saw in the euro sterling chart, there was a bump higher in the euro yesterday. For whatever reason, the German GDP figure has been one thing that's been attributed to it. I'm sure there's probably a couple of other bits as well. I think the important point here is that we are still in a bearish setup. And that's what I wanted to highlight at this moment in time. Now that can obviously change as time moves on, and you've always got to be vigilant with the charts, but that head and shoulders pattern is far from complete. So as it stands, while this is a nice bullish move, and we've had one red flag, which is the break of that falling speculative trend line, for me, this is still a bearish move. We still haven't broken through the previous highs, which would be the next test. And also, the head and shoulders itself isn't void until you break through the actual head itself. So for me, I think the thing I wanted to highlight here is that we are still bearish, even though we've had this minor rally to the upside. We were previously holding around the neckline, and the fact that we had a number of tests was a sign that we were potentially going to see a sharp correction, which is what we're seeing now. Now we're testing the 50 fib of the entire move, so that's the head of the head and shoulders down to the recent low. That will be an interesting test for us now. I'll be really intrigued if we get towards those kind of just shy of 119s, because that's a 61.8 fib of the move, but that also coincides with the support of the mini head and shoulders, which we talked about previously, which is already completed, and also the previous high as well. So I think there's a couple of key levels. The 50 and 61.8 fibs for me really do stand out here. Should we see a break of the 61.8 fib to the upside, it's not the end of the world. The head and shoulders are still in play. It's a broader retracement than we would typically see, or that we obviously would like to see. But until the actual head is broken, I still remain bearish on this, and through the 61.8, maybe a bit more of a cautious bear. But I guess the point I'm trying to make here is just because we've had one day rally in the euro, it doesn't mean that it's particularly bullish in the near to medium term.
And trading above that 50% fib, around the 118.20 level, could it then move up to the next Fibonacci level? Is there anything to hold back the euro dollar if we do see that break? And I think we may already have.
Yeah, I mean, I think with regards to the 50 and 61.8 fib, I like to look at them as a block. I don't like to look at them individually. Sometimes you'll see it hit the fib itself and reverse, and you'll see a very nice technical bounce off these fib levels. I like to look at those two in particular as a block. Anywhere between the 50 and 61.8 fib, I view as a possible rotation point, and the same is true here. So if we've gone through the 50 fib, it's not the end of the world. Through the 61.8 fib, I'll become a lot more cautious, just because that's all three fibs that have been taken out. Then it would also be that we're trading back above the shoulder of the broad head and shoulder movement, and that would therefore make me more of a cautious bear, as opposed to as confident as would be if we do rotate lower off one of these key points. But like I said, when it comes to Fibonacci, this is a key level, this is a key level, this is my favourite level. But if you look at it more as a range with rotation points, then things start to make a lot more sense, and also you start to see things unfolding a bit more as you'd expect, because at the end of the day, the markets aren't perfect. You always have to leave a little bit of room for manoeuvre as well.
So very insightful and good advice. Look out for that if you are Fibonacci traders. But in the meantime, Craig, thank you for joining us.
Thank you.